You know that sound? Today's closing bell at the New York Stock Exchange.
That's right, hitting 4 p.m. here on the East Coast as we watch as the Dow Jones settles, closing the day in the red, down approximately, 230 points approximately. The S&P 500 closed the day slightly down as well. The Nasdaq closed the day slightly up.
Emily Peck joins us now. She is a markets correspondent with Axios. Emily, what was driving the market today?
Lots of things are driving the market, but probably the two biggest things weighing it down today were concerns about First Republic Bank, which their stock continued to fall. It's at an all-time record low, and worries about the debt ceiling crisis continue to mount. And that's really weighing on the market, even though there were some good earnings from Microsoft today, and Meta, or Facebook, is going to report after the close and is expected to be okay. Those good reports are not enough to sort of set the market on fire or anything like that.
Wow, so it does kind of seem like a bit of a mixed bag. You mentioned First Republic. The shares of that bank just continued to tank today. It hit a record low yesterday. Do you think because of this new development, the government may be inclined to step in, as they did with SFB, secure the funds beyond the $250,000 cap, considering we also have this debate over the debt ceiling, which markets don't like?
Yeah, I mean, something kind of has to happen with First Republic. Right now, it's basically a zombie bank. If it had to sell all its assets, it would have much less money than it does now, because it would have to mark them to market, and they're worth a lot less than, it says on the books. They've already been kind of bailed out from the big banks led by JP Morgan. They gave them a $30 billion infusion when we were all talking about Silicon Valley Bank last month, and sort of came to their rescue. But the picture really didn't get much better for them. As we learned earlier this week when they reported earnings, they saw $100 billion in deposits leaving the bank, and there's really in this kind of zombie state. And Axios had a good piece this morning basically laying out the options here, and it's either the government steps in, shuts down the bank, and the question, as you rightly pointed out, is what happens to the uninsured depositors. Now, if they don't make the uninsured depositors whole, that could really start a whole new wave of banking crisis. And I don't think anyone really wants that. So there is a hope that there's some kind of a private market solution ahead.
So is this, and you kind of referred to this, impacting other regional banks and fears about the already fragile industry?
So right now, the answer seems to be no. Other regional banks are doing okay and holding up. It's like First Republic is this like last remnant of what was basically a crisis last month, or we can quibble on the word choice of crisis, but it's the last holdout of that. So the way it gets worked out now kind of is make or break for these other regional banks, because if it goes south, then it's going to spell trouble for the sector itself.
Emily Peck, thank you for that context.
All right, thanks, Emily.
Thank you.